Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Check your calendars, mark your calendars. We're just about 1 week away from what President Trump calls a Liberation Day tariff announcement, unveiling so-called reciprocal tariffs he sees as retribution for tariffs and other barriers from other countries. This is including some of those longtime U.S. allies.
Yeah, well, the announcement would remain a very significant expansion of U.S. tariffs. It is shaping up as more focused than the sprawling, fully global effort that Trump has otherwise mused about. This is according to people familiar with the matter.
Meantime, just about 90 minutes or so ago at a White House cabinet meeting, President Trump also says he will be announcing tariffs on cars very shortly and on pharmaceuticals at some point in the not too distant future. Those time parameters were his words directly. Let's get more on the president's plans. We head to our Bloomberg News Washington, D.C. bureau and to Bloomberg News senior White House correspondent Josh Wingrove. Josh, thank you for being with us. We know it's super busy just trying to keep track of all of the tariff news. President Trump talks about Liberation Day. What exactly does he mean? Liberation from what?
He thinks the U.S. is being ripped off and that the tariffs put in U.S. exports by other countries exceed those, the ones that are in place for the U.S. for those countries to sell here. And in a lot of cases, he's right. There is an imbalance of export or of tariff levels, but a lot of independent economists would say they're just simply a function of being the world's biggest economy, a consumer-driven economy. So that's why you don't have a lot of those mainstream sort of economists on board with this. But the whole question has been, what is he going to do? And so if you're having trouble tracking the ball on this one, I hear you. Join the club. The story as of a couple days ago that you alluded to, that story is that we think that the plan coming on April 2nd, as of now, is taking shape as a narrower plan than he's mused about in the past, chiefly because he's long since sort of moved off the plan for a global tariff, and now we'll do these reciprocal tariffs, but not necessarily on every country, and that the plan as of now does not firmly include, as we reported a couple days ago, those sectoral tariffs. Now, as you note, we're told today a couple of things. A White House official telling us today that sectoral tariffs remain on the table, and Trump, of course, himself alluding to a couple of them, autos and pharmaceuticals, not really saying the time frame, and he's kind of been conflating autos and reciprocals as well. So these are a lot of tea leaves to read. Tariffs are coming. The exact sequencing, the scale of them, and on what day and whether they're broken into batches remains unclear, but the White House is obviously grappling with how wide to go. There are internal discussions around that. CEA Chair Steve Myron telling Saleha Mohsen on Bloomberg Television in the last hour that those discussions are ongoing, so it's all TBD.
Well, we know it's all TBD, and we know that, Liberation Day, as the president calls it, is just about a little over a week out at this point. But what, Josh, do we know about his thinking and why maybe he's making this more targeted push than he previously announced?
The implication is, and we don't know for sure, but markets have been reacting poorly to not only the tariff threat and the specter of even more tariffs, but the uncertainty around it, the whipsaw effect, right? He imposed, for instance, those tariffs on Canada and Mexico, then clawed them heavily back, temporarily, I'd add, a couple of days later. What happens to those remains very much in the air. That's the third leg of the stool, those fentanyl-related tariffs. Remember, of course, he already has tariffs in place on China, that 20% rate. Whether that's adjusted or added to by the sort of reciprocal rate that presumably will include China to some extent, we don't know. But right now, Trump himself is an avowed believer of tariffs. Markets have been sort of betting that he would use it more as a negotiating tool than a firm policy outcome. I think it's pretty clear that Donald Trump wants tariffs a big part of the equation, in part because they want to book the revenue from it as they have these talks on Capitol Hill towards a reconciliation package to extend those Trump tax cuts and enact other tax cuts that he wants. So Trump wants to shift the revenue base partially to tariffs. He thinks that sounds better. He thinks he can sell it better. He thinks it prevents sort of industries from moving away and can help rekindle things like the auto sector and steel industry. The industry groups themselves are just much, much more mixed, very nervous about this. Remember, of course, many American manufacturers, for instance, rely on imported materials as part of their own supply chain, so they'll be hit by this as well if these start going pretty widespread. And of course, the one thing we don't know is we just don't know what the number is going to be, right? Like if he comes out and says 5% or 10%, versus a 25 on a bunch of countries, right? That's going to be such a big difference. We just have no indication right now what that sort of reciprocal number will be, but he's talked about sort of bigger numbers when he has mused about it. For instance, he's talked about a 20% VAT tax in Europe that he's going to count as a tariff. Well, if he counts that dollar for dollar, and we start looking at that 25% or something like that in Europe, that's a big number, but we just simply don't know. I
mean, will we ever know the math, Josh? And the only reason I ask is, as you note in your article, what the president does around tariffs, in particular, and policy in general, can be so fluid. So, will we ever really know the math about tariffs versus tax revenue? I mean, obviously, tax revenue would be something passed through Congress and there'll be rules and stuff. But when it comes to tariffs, I mean, he could impose more, pull back. It's hard, right?
Totally, and they're making these numbers up essentially, right? They're counting things that are tariffs as well as non-tariff barriers. So there's an eye of the beholder factor to this. Whatever Trump decides to count in his math, they're going to count. So I think that's important to sort of keep in mind. He's also made clear that he can roll these things back. So we saw that twice now with the Mexicans and Canadians. Once a 1-month deferral, and then another one a sort of clawback for a month. And so there's also the potential that some of these things could be enacted or announced on the 2nd, maybe enacted immediately and then rolled back potentially if other countries respond with lowering tariffs of their own. Or we could have an announcement where they're announced but not immediately implemented, and then people can negotiate presumably in that interim period. It's just we don't know. But that long lag time factor, we have been there before with steel and aluminum, and the end result is they went in as scheduled, no one got an exemption. So people should not hold their breath necessarily that a long implementation means that there's a window for some grand bargain.
Are there certain geographic regions that are more likely to be rolled back or could be more temporary? I mean, Mexico and Canada, the off-ramp, Josh, for this is related to fentanyl. The other tariffs that the president has announced don't necessarily have those off-ramps.
Yeah, I think he wants countries to announce a lowering of their own tariffs, and we'll see whether they do that. Mexico has taken a much more sort of muted approach in their negotiations with that. There's been sort of positive signs that the administration likes that. They've got a new prime minister in Canada, who, of course, yesterday called a general election that could lead to yet another new prime minister in Canada in a month's time. So I think that, TBD on that one. Whether the Europeans announce some sort of tariff reduction deal in the EU, I think really remains the case. He keeps talking about the EU, but the countries that are really sort of on him are countries that trade a lot with the U.S., that have goods deficits in trade, or that the U.S. has a trade deficit in goods. That's an important one because he doesn't tend to count services trade. It's only goods trade typically that he counts. And so by definition, if you're hitting the people that you have big trade relationships with, you're hitting the countries that you tend to be on better terms with usually. Of course, there's big exceptions to that, chiefly China. But that's what's sort of rattling things right now, is the ones that seem to be in the line of fire.
Right.
Include many allies like Canada, like the EU, like the Japanese, like the South Koreans.
Josh, one last question, and just about 30 seconds here, but the White House has argued that tariffs will make the U.S. more competitive, attract foreign investment. We've seen some announcements from global companies around that, pledges of money to be spent in the U.S. Pledges mean exactly what? It's promises, but not necessarily reality. I mean, does tariffs lead to more investment into a country, just quickly?
So far, there have been announcements of investment that you could link to the threat of tariffs. Whether those investments materialize remains to be seen, and of course the sort of other side of that coin also remains to be seen. In other words, companies might announce they're coming, but other ones might not be able to survive the tariffs, and they have to shut up shop.
All right, good stuff. Obviously, one of our big stories, if not our big story, certainly the markets are watching today. Josh, thank you so much. Josh Wingrove, he is senior White House correspondent, Bloomberg News, there in our D.C. bureau.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
At beginning of the year, our Bloomberg Opinion team featured a column, and Tim, it noted crypto could go rogue in 2025. Again, it was a bunch of opinion writers weighing in. They noted that when Donald Trump returned to the White House, which of course we know he did, digital currencies may either go mainstream or, Tim, they could be brought down by a cast of villains.
We haven't seen him brought down yet. Our next guest company provides tools for ferreting out crypto-related crimes. Joining us is Maria Haustova, Chief Operating Officer at the blockchain analytics firm Crystal Intelligence. She joins us from Dubai. Marina, good to have you on the program this afternoon. What are you seeing at Crystal Intelligence when it comes to analytics? Who's using the platform, and who, in your view, is using crypto for illicit purposes?
Oh, thank you so much first for having me today. Happy to be here. Our customers are coming from two sides, from financial institutions, and financial institutions care about what kind of assets do they accept as payments, so for compliance teams. And another cohort of our customers are governmental bodies and law enforcement agencies around the world who, of course, fight crime. And when we talk about crime, who uses that, of course, right now, crypto still stays as one of the avenues, it's one of the methods for money launderers to try to hide money, and especially for those type of criminals who are trying to attack or hack particular financial institutions, steal their crypto funds, and then try to go away with them. So, yeah, this is the usual case that we're dealing with.
Well, whenever I bring up to crypto folks that, the one criticism of cryptocurrency is that it can be used for illicit purposes, they always push back against me and say, hey, criminals have been using cash since cash was around for money laundering, for illicit purposes. This is no different. It's actually more easy to track crypto because of the blockchain, depending on what we're talking about. We should note, not all crypto is the same. Right. But in your view, how do you take that criticism?
Well, to me, cryptocurrency is transparent and by default, and cash is not so much. So that's why I'm here in this industry. And that's what we've seen for many, many years. Basically, the blockchain technology enables us to track through all the movements, to understand, what actors are involved in the particular transactions. So to me, the transparency that we bring in is just something incomparable to what is possible to achieve through traditional financial methods. And a lot of possibilities. We are, of course, have to compete with the bad actors because they are also very inventive. We work 24/7 on combating crime, and they work 24/7 trying to outrace us.
Marina, we have definitely talked about and covered a lot here at Bloomberg, crypto crimes or crypto-related crimes. What are the most common types of crypto-related crimes, and who happens to do them the most? I mean, what?
And if Carol were to do a crime, what crime would you recommend for Carol to do? I'm just kidding.
Hypothetical.
We can take the biggest heist that happened recently. The big cryptocurrency exchange was hacked, and billions were stolen. Big team, and we expect that this team is very much connected with North Korea, has been actually working on this case to make it happen for many, many months until they found the right moment for that. So then what we see is a huge team trying to launder these funds. So they are constantly trying to find locations through which this money can be digital assets, right? Can be moved around so that they don't get frozen by financial institutions following regulations and having an ability, to stop these funds or freeze these funds. So for the last 2 or 3 weeks that we are actually tracking this particular case along with the rest of the industry, it has been a very, very a very dramatic case, taking a lot of resources from us. I don't think it's the last, case of such kind that we're going to see. So a lot of work for us to do, and a lot more actually yet to come. And we don't know yet, what kind of new trends are there in development, because it changes so fast, and the regulations are not so fast to define what actually, where actually everyone should look at this particular moment.
We're going to have to leave it there. Marina Haustova, Chief Operating Officer at the blockchain analytics firm Crystal Intelligence.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
News in the world of weight loss today, Carol Masser. Novo Nordisk has agreed to pay United Laboratories International Holdings as much as $2 billion for next-gen obesity drug. It's the Danish Ozempic maker's latest move to refill its pipeline of experimental treatments. Also, last week, Eli Lilly began selling its blockbuster weight loss and diabetes drug Mounjaro in India. It's a country that has the world's third largest number of obese people.
We continue to see this marketplace grow, expand, and we continue to see each of these major drug players look for their next offering when it comes to GLP-1. We do talk about these weight loss drugs an awful lot, especially from a business perspective. Investors have really sent shares of these companies higher than lower. There's been some volatility, certainly over the past couple of years. Dr. Sue Dakotas is a New York-based physician, a board-certified medical internist, and a weight loss specialist. She is an attending physician at NYU Medical Center, joining us right here in New York City. Dr. Dakotas, good to have you here on Business Week. This is something we've been covering nonstop, to be quite honest, over the last 2 years. We have a reporter that's devoted to it, to really understand the offerings, the nuances between the different drugs, and the expansion as we continue to see new offerings come out. Tell us about, from your perspective, what you've seen over the last couple of years in terms of the uptick in the usage and whether or not it really is a significant change when it comes to treating weight loss and actually making people healthier in the longer term.
Well, in my practice in New York City, I have had tremendous results in my patient population with using these new GLP-1 drugs. And I've used just about all of the ones that are available. And I'm really excited about the new drugs that are coming out. So as you know, there's something called CagriSema that Novo Nordisk is going to come out with, which is a new drug called cagrilintide that they are combining with the Ozempic, the semaglutide. And retitrutide is coming out from Lilly, and that actually is a 3-receptor drug. So what we see is that these drugs get more sophisticated and affect more receptors, and I think more patients are going to have good results. The problems that we have with semaglutide in the beginning, before we had access to Mounjaro, tirzepatide, is that many very overweight patients hit the wall, meaning they couldn't lose weight after a certain period of time. And that was very frustrating. And we found that with tirzepatide, being they were hitting a second receptor, patients actually lost more fat and weight loss continued. And I look forward to that with some of the new drugs that we have. So I think we're going to be able to reach larger numbers of patients. But what I always hear is so many people are saying these are lifetime drugs, meaning you have to be on this for a lifetime. I really disagree. In my practice in New York City, I've been able to get most of my patients off these drugs if they're not diabetics. And I think a lot of times we're missing the point with these drugs. People know that they're appetite suppressants. They also know that they're great to stabilize insulin and that they're great to reverse insulin resistance. And that's all they're thinking about. And then the person loses weight and then they go off the drug, sometimes abruptly, or they stay on it forever. What I do in my practice is I use a body composition scale.
Okay.
So I'm closely monitoring people's body fat. And that's really the key. I think if we can get that body fat down into the sweet spot, I think that's where we get the long-term health effects that everyone is talking about. So that's where we're getting the huge anti-inflammatory effect. That's where we're having the appetite regulatory system really being rebooted on a permanent basis. So that person doesn't crave the foods they used to crave. And they have they have a lesser appetite long term, which is really, really important.
Are you seeing this, doctor, in your office combined with other methods of losing weight? Is it important that your patients also remain active or get active?
Oh, of course.
Or is the shot enough?
Well, we always start out with, we know our patients well, taking a really good history, What have your eating habits been? What is your lifestyle like? And practicing in New York City, many patients are pretty sophisticated. They already have a pretty good lifestyle. They may not come into the office very, very obese. They may be barely overweight, or their BMI, which is a height and weight parameter, may be normal, but their body fat is higher than they'd like it to be. And as they get older, maybe they're menopausal, they're getting into middle age, they find that their body has changed. They don't feel as good. Their clothes fit differently. They don't get as much out of exercise that they used to. So then we really help those people reach an optimal state of health by getting body fat down. But yes, of course, diet and exercise is important. But when you're insulin resistant, when you have hormonal problems, there are other genetic and environmental issues that we're hearing about so much now, aren't we? All these environmental things that are affecting our metabolism. So many people are already adhering to a good lifestyle, and they just need that extra help.
I'm getting hungry. That's what I'm going to say. I'm ready.
I don't think that's the point of
I thought
the
I heard
conversation.
stomach, and I'm gurgling over here, and I'm kind of hungry. No, what I want to ask you, though, is I've seen people who get on it lose a lot of weight, but they also lose a lot of muscle mass. And I'm kind of amazed by that. I've seen them where their legs are very thin, like all their muscle is gone, which can't be a good thing.
Well, it gets back to that question that the issue here is, what is their body fat? Is anybody monitoring that? So if the patient is not monitored carefully, so they're not really given dietetic nutritional support, because as you know, these medications can really turn your appetite off. So sometimes you don't feel like eating anything. So we have to watch that carefully. Also, hydration is key. If people are not really well hydrated, they wind up burning muscle. Because the body kind of protects you. When you're burning fat, you're losing a lot of water. So the body protects you from this. So it assumes that you're getting dehydrated. This could be very dangerous. And then it can switch to burning muscle as a last resort, which is not a good thing. None of my patients have lost muscle because I'm watching it very carefully by weighing them. And they're drinking a lot of water.
As someone who's been practicing for a while, how do you think about this medicine? I think there's some that think, wow, is it just too good to be true? We kind of joke with our reporter who covers it, like, is this the drug that's going to, kind of cover everything that ails us or fix everything that ails us? Or is it too early to know if there are going to be some kind of complications down the road from taking it?
No, that's a very good question. I mean, I've been using these drugs for about 12 years now because, before Ozempic, made its big splash, there were other drugs that we used in the same family that weren't as effective. These drugs are peptides, and what peptides are basically simple chains of amino acids. So I think that as far as the pharmacologic structure of the drug, it's simpler than aspirin. So I think that the body knows, these are not complicated drugs in their structure. So therefore, it's easy for the body to break them down. And we use peptides for a lot of things in anti-aging medicine. I think they have a very high safety profile. But what concerns me is that so many people are accessing the wrong kind of care. They're going on these online platforms, and really just like having a meeting like we're having right now. They're not getting seen by the physician. They may not be in contact with the physician at all. And if they are, it's probably not a weight loss physician. They're not getting weighed by any matter, or certainly not a body composition scale. So those, I think, are the patients that are not having great results. And so many people are resorting to these online platforms. And even Lilly now, and Novo Nordisk, I understand, they're going to have a place where somebody can get the drug directly from them. So they'll probably have a consult with a PA or a doctor via Zoom, maybe once every couple of months, and that's what they call getting medical care. Right. So that's where I think we're going to have problems.
It doesn't sound like you're a fan of that. Hey, we only have a couple minutes left, so I want to make sure to get in some last questions here.
Oh, sure,
Back in October, RFK Jr., who is leading the Department of Health and Human Services, he says that delivering healthy food, he said this in October, to the American public could, quote, solve the obesity and diabetes crisis for a fraction of the cost of obesity drugs. My understanding is he's since said different things about the GLP-1s, but in general, he's not a huge fan and thinks this stuff could be solved through diet and exercise. How do you view that?
I think that's incorrect. I mean, I think if you look at people that are markedly obese across the country, certainly food and lack of exercise has something to do with it. And especially for future generations, if the young children today and children who will be born, if they're exposed to a really healthy food supply, I think that's going to be great. But for the young adults and above who are obese, I don't think that just eating healthy is going to be the answer. Now, these drugs are expensive. So most patients that I see have tried diet and exercise. They've tried every keto and paleo and a vegan diet. And I think sometimes insulin resistance is more than just the food you eat. There are other chemicals in the environment, genetics, epigenetics, hormones. All of these things can affect the way your body metabolizes nutrients. So I don't think it's that simple. Like, I don't think that he would be able to reverse obesity by just giving somebody a healthy diet.
Just got about 45 seconds left here. Dr. Dakotas, I'm just curious, what percentage of your patients who look to lose weight use the GLP-1 drugs? And are GLP-1 drugs for everyone who are looking to lose weight? And again, just got about 30, 40 seconds.
No, it's not for everyone. I mean, if somebody has a history of an eating disorder, or they have a lot of thyroid issues, pancreatic issues in the family, very sensitive GI tract, if they're not that overweight or their body fat is not that high, they really should try a clean diet first. And it has to be assessed. Is this person really eating cleanly? Do they know what they're doing? What kind of exercise are they doing? Sometimes if they're doing too much cardio and they're insulin resistant, that can cause them to actually gain weight.
Wow.
What they might need to do is do more resistance training. So every patient's an individual, but I think for the most part, if someone cannot lose it with diet and exercise, and I've documented that their body fat is high relative to their weight, and I think they would probably benefit from a GLP-1.
All right, going to leave it there. Thanks so much for joining us. Dr. Sue Dakotas, New York-based physician, a board-certified medical internist, a weight loss specialist, attending physician at NYU Medical Center, joining us right here in New York City. Interesting stuff.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. Just got about 18 minutes to go until we wrap up the Monday trade. Just talking with Bill Maloney kind of off air, just fundamentally, technically, an interesting day where futures were up a lot. We came up out of the gate with some gains, and then we just continued to move higher.
That's what you talked about when I went to get a snack?
Among other things. Okay. But I was like, what do you think? Like where we're going. And that, from a technical basis, that's a pretty strong sign. We'll see what Sarah Ponczak has to say, though. What do you think of?
I brought you a banana.
He did. I was hungry. Like, she's talking about GLP-1 drugs, and all I could think about was like, I want to eat food.
Yeah, well, I don't think that's the whole idea of the GLP-1s.
I know.
All right, let's get into it with Sarah Ponczak. She's financial advisor at UBS Private Wealth Management. She joins us from Florida. Sarah, how are you?
I'm great. Good to see, or I guess hear from you guys. Tim, you're so considerate bringing Carol a banana.
When are you coming up to New York?
3 bananas.
We're actually hoping to come up in the next month or so.
Okay.
So I will let you guys know when I will be up there, and hopefully I can make a trip to the office.
Let us know if you need help finding the place. I know it's your old stomping ground, so you don't need any directions.
I could still find it with my eyes closed.
Okay, good. Well, in the meantime,
there enough time.
In the meantime, maybe we'll get some clarity on tariffs before then, because April 2nd, it's supposed to be Liberation Day. You are thinking a lot about tariffs when it comes to the uncertainty that is out there, though today's trade seems like it has a lot of certainty in it, Sarah.
It does. Today's trade has been very forceful and strong to the upside. So it's nice to be on with the two of you on a day that's actually green and happy for stocks. But at the end of the day, tariff talk has been all over the place. The conversation has been very fluid. And although we have gotten multiple calls and emails from clients over the past few weeks just asking what is going on, we've been stressing just this, that the story or the narrative and the policy at the end of the day can really change on a dime. And that's what we're seeing today. And we're seeing the reaction in markets. And what I think is so interesting and I think important is to just put this all in perspective. Because if you look at the correction that we saw in the stock market, at the end of the day, it was very normal. And frankly, we were overdue for one. We had 2 straight years in which the market was up more than 20%. And even in the last 2 years, a lot of people forget we saw corrections in each of the last 2 years. Last year, the market was down 8% at its intra-year low, and yet ended the year 25% higher. In 2023, we also experienced a 10% drawdown, yet the S&P 500 was also up more than 20%. This year, I think it just feels, and I think the technical term is, it's more in your face. You can't avoid it. It's in the news. We're hearing it every day. We see it in tweets. We see it on Truth Social, wherever you go to see Trump's tweets. But it's just more in your face now, which makes it harder to ignore as an investor.
But, Sarah, to that point, yes, more in your face and perhaps not exactly like the first term of President Trump. Having said that, we're having questions where people are wondering, American exceptionalism, no more, questioning folks whether or not the U.S. is uninvestable and saying, yeah, maybe so because of different policies and pulling back kind of from the global market trade potentially. And I guess time will tell ultimately how much sticks and what this means for the U.S. economy. But I look at, the WEI function really well on the Bloomberg, and the Euro Stoxx 50 is still up almost 11% this year. I look at the S&P 500, it's down 2%. So money has been going overseas. Are your clients saying, wait a minute, I got some concerns about really the U.S. market until we see whether or not these policies, kind of settle down? So give us some color around that, if you would.
Money has been going overseas. There's no doubt about that. As you mentioned, Carol, if you look at how the different global indices have performed year to date, you look at China indices, you look at emerging markets, you look at developed markets internationally, they're all outperforming the United States. But is it uninvestable? I think that is much too harsh a term to use to describe the United States. And we're still very optimistic on U.S. equities. Sure, we've seen a big hit to tech, which has really, at the end of the day, driven the sell-off that we've seen. I think a lot of people would be surprised if you looked at the sector breakdown of the S&P 500 this year. Only 2 sectors are actually down. The rest of them are positive. It's just that those sectors have the heaviest weights in the index.
Right.
So I do think, look, it does highlight the importance of global diversification. We've always kept exposure to international in our clients' portfolios. We are now discussing possibly increasing that exposure a bit. But at the end of the day, if we look at where we still want to be invested over a longer period of time, it's still a lot of these U.S. tech names.
Why is that, though, Sarah? Why do you want to stay? Why is that?
What'd you say?
Why is that? Why do you want to stay invested in U.S. tech companies right now? We talked to Peter Atwater last week, who has some serious concerns about the U.S. market.
When we look at future growth projections, and if you look at the amount of money that is being spent on artificial intelligence and projections for what that is going to mean for revenues in the future, it's still very strong. And we've seen, some of these tech names, we've seen some pretty high double-digit corrections in some of these names. So we're looking at this more as a potential buying opportunity. Even, yes, we could see more volatility. Things could get a bit worse. I don't think this is it. I don't think, okay, we had a strong day. That's it. We're on the up. We're not going to see any volatility anymore. But if I look at, the United States growth potential versus that of, China or Europe or emerging markets over the next 5 years, for us, U.S. is still the place we want to be. And it is largely because of that sector makeup.
But have you been advising clients to kind of be buying all the way back to mid-February when we started to see the S&P go down?
No. So what's interesting is it actually seemed to me as though sentiment was the worst when the market was only down 3% or so, because headlines were just flying. We got a lot of calls from clients that, in those early weeks, and we kept saying, we're due for a correction. This is likely going to get worse. Don't do anything quite yet. When we started to get towards the 10% correction mark on the S&P 500, that's when we started to say to clients who have a lot of cash on the sidelines, have been looking to nibble, say, look, you don't need to do this all at once, but you can start nibbling here, start buying in, start buying the dip. And what's really interesting is that if you look at the data, if you look at the numbers, if you look at corrections that occur within a bull market, and I know that's a caveat because I'm saying that the correction's not going to turn into a 20+% correction. The reason I'm saying that, though, is bear markets are pretty uncommon. They happen on average once every 7 years, and we just witnessed one 3 years ago. So that would be very soon to witness another full-blown bear market. But if you look at corrections that don't then delve into a 20+% correction, they tend to be good buying opportunities. So if you're an investor who bought in after stocks had fallen 10% on average, the next 3, 6, and 12-month returns are 8, 13, and 19%. It's not too bad.
To be fair, we're only down about 6% from all-time highs on the S&P 500 right now after today's rally.
It's not terrible, right? No. I mean, considering the run-up that we've seen the last couple of years.
It's a little bit of a shift than we saw a week ago.
The tone definitely feels different today. Hey, Sarah, thank you so much. Great to talk with you. Sarah Ponczek, she's financial advisor at UBS Private Wealth Management out there in Florida. This is Bloomberg.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.